What's going on, traders? Thanks for tuning in today's YouTube video. This one is the second one for today. As I promised to you in the Telegram channel, I'm going to do a GBPUSD full breakdown analysis in this video. I asked you in a poll what pairs you want me to cover up, and the number one was gold with about 50% votes for doing that analysis, and the second most voted was the GBPUSD, and this is why I'm going to cover up this one as well. Plus, the structure of the GBPUSD has changed a little bit this week, so I already made on Monday a full breakdown analysis on all the dollar pairs that I trade most of the times, and yeah, it's definitely time to give you over here a new update. If you are new to this channel, guys, then don't forget to subscribe over here to not miss the new videos. It's super important because you definitely want to watch the video immediately after I uploaded it, because this is kind of information on the lower time frame, so definitely take advantage of that one as soon as possible. Okay, guys, and before I'm going to start off with my analysis over here, just a quick check over here on my TradingView channel over here. Also over here I post a lot of updates and video analysis as well, so definitely super important. Plus, if you are struggling with your trading, guys, check out the inner circle. We made over 80R in just 4 months, and the last week we made a plus of 8.5R. that's equal of 25.5%. and if you're interested, guys, just check it out over here. And if you do not have the time for that, here is my copy fix, where every single trade that I take in the inner circle will be automatically copy paste to your trading account. And here is my trusted broker that I use right now. 2 years, that's a long time, and I'm super happy with that one. So yeah, check it out, guys. So let's get it right to an analysis, and yeah, this is kind of a different analysis. So I'm going to start off with the market phases, just to illustrate you why this market is ready to go super crazy to the downside. This is my bias on the GBPUSD. I would like to see the market going more to the downside, and I'm going to explain this with an additional confirmation, which is the market phases. Now, what are market phases? Well, there are a lot of options out there. Also me, I use several options out there, but here on the GBPUSD we're going to use this one. Now, what we can see over here is this is the accumulation phase. What does that mean? Well, an accumulation phase is a high price of interest. I call this always POI. That's a high level of price of interest for financial institutions. Now, you're going to understand this whole context if we're going to have a look on the monthly. But what we can see over here is that the market initially went super high to the upside, and then afterwards there was a big sell-off. Okay, big sell-off from monthly resistance. So we can take this over here as well. Let me define this level for you. This is a high interest level for taking profit, and this is exactly where the market went to the downside. Okay, and the next level where hedge funds and financial institutions are interested in buying this market is at a strong level of demand, and in this case we had one over here, and we can see it over here from the daily perspective how they were accumulating over here the positions on the lower time frames. This whole thing will look something like this. It's always most of the time so a rectangle shape, and then the market will break out, okay, and then it will continue with a linear growth as we have it over here in the market phase 2. So we have afterwards a pretty nice linear growth, and the key of this is to get a nice entry during this movement. Okay, you can of course trade short, as you can see. You can trade longs. You can trade this whole thing as a big swing to the upside. So it was completely clear, and I made a lot of analysis when the market was around this area, why I was expecting that GBPUSD should go crazy to the upside. Okay. And look at this, that was the resistance. This is what we had here. Again, a big sell-off to the downside, but the market is still holding this linear growth over here. This is why I marked this trend line over here. Okay, that's pretty normal. And the result after a linear growth is going to be an exponential growth. Okay, that means during this movement over here to the upside, a lot of traders retail traders are going to join the market. This is way too big right now, sorry. This is liquidity, okay? I'm using right now this Bitcoin thing over here. This is liquidity, okay? During this movement to the upside, the market is building liquidity, okay? Now, that means for us that the price will go up higher, okay? Till and very interesting point when the market afterwards will go crazy to the downside. This is something where you will see this pattern over and over again in the forex market, but especially in the investing market, so stocks or something like this, you will see this over and over again, a normal linear growth, and afterwards super exponential. Why? Because during this area, a lot of traders are going to have a look, okay, we are at a high interest price for a big sell-off, where we would like to see some sort of retracement, but hedge funds are going to buy that thing through, okay? Because a lot of traders are going to look here for some shorts, stuff like this. Some of the trades are going to take profit over here, but the market will just explode to the upside. And exactly during those movements to the upside, again, a lot of retail traders are going to enter the buy market. And in this exponential phase as well, many traders don't know should I take profit or not, and they're not going to take profit because they will see this huge uptrend over here. They will see how fast the market will move. I mean, look at this, from 1.36 here, the market exploded to 1.42. That's 600 pips, guys. That's huge, okay? That's huge. And most of the retail traders, they'll think of, okay, this market will be unstoppable. We will go straight to 1.50, 1.45, something like this. But that's not going to be the case, because I'm going to show you right afterwards why here was a high interest level for a big sell-off. But basically, after this exponential growth over here, the market will face a quick sell-off. We can call this also market down, and the market will go crazy to the downside, and yeah, everybody will be clear. So everybody who joined the market here, who joined the market here, who joined the market here, all their stop losses will be hit. Then again a correction, something like this, and then the market will continue with this uptrend if this market is a bullish one. But this is kind of the normal market phases what you will see in a lot of forex markets out there, okay? That over here on GBPUSD is a pretty nice example. Right now, guys, I would like to continue with the analysis, showing to you right now why I expect that this market should go down to the downside. Now, that was the price of interest that I talked to you. Why I wanted to see the market giving us a quick sell-off exactly from this area. It is because of the monthly area of supply. Okay, this is definitely always a high interest level for the market, and here we have a lot of liquidity located, and this is why the market likes to go up till this level, grabbing this liquidity, and then afterwards it will go down lower. And in this case, because of we are on the monthly time frame, monthly area of supply, we would like to see a monthly correction, and that will bring the price a little bit lower. Currently we're testing the 0.736. It's not that important level, but what I would like to see always is a test of the 0.382, and that will be also strong level of demand in the lower time frame. So look at this, the weekly time frame, that's a strong level of demand, plus in this case it is also strong level of previous resistance, now turn support, so a little bit below, so we can map out this whole thing over here, okay? And this is what I would like to see right now after the market had already started. Look at this, it already started with this impulse, currently giving us some sort of correction. We can also take from here, for example, the fib retracements, and probably the market will go up higher to test right now the 0.32, but it's not important right now. That's a probability, of course, just for you to know. If the market will not go down from here, then we have a chance that the market will go up higher before dropping down lower. But what I would like to show you to you in this weekly time frame analysis is that I would like to see the market going down till this level before afterwards continue to move up higher, because afterwards we're going to expect the further confirmation of this uptrend structure. Look at this, that's also the trend line bottom in this case. Also here on the weekly time frame we can identify that exponential growth in this case. Where exactly? I mean, look at this. That was normal linear growth with impulses, correction, and impulses. But look at this one. That was super exponential, and then the market has given us a sharp sell-off to the downside. And that means, from my point of view right now, we would like to see the market hitting the 0.32 based on the monthly time frame. And if we are going to use right now the Fib retracement on this weekly impulse, we can see that we would like to see the market going down between the 0.786 and the 0.618. So we didn't even test the 0.618 in this case, and because of the structure is exactly located over here, that level will be the highest interest for the market to go to the downside. Okay, so we have right now a lot of confirmations from the higher time frames as well. Let's switch down to the lowers to find the specific entry area. Well, on the daily, we can see that the market has started impulse, correction, impulse, correction. That's good. We're currently within the correction. What does that mean right now? Because we see that level over here, we can see that wick over here. It means buyers came into the market right now, but the whole environment on the daily is still bearish. That means right now that based on this impulse right now, we tested perfectly the 0.618. Okay, that's my support resistance structure in this case. That's also a little bit of the daily supply. Okay, so the daily supply definitely has the liquidity already here a little bit, but probability is still here that the market will test the 0.786 before dropping down lower. Let's see. But right now my idea is that the market should go down from this level to the downside, and I would like to see the market breaking these lows. Okay, lows are always high interested level in the market. Why? Because exactly below there, most of the retail traders have their stop loss, and stop loss are equal liquidity, guys. Okay, so we would like to see the market going down lower to hunt those stop losses before afterwards continue with the up move. And with this strong movement to the downside, guys, we're going to also complete the correction on the monthly, weekly, and the daily time frame. So as you can see, every time frame right now is super in alignment, and we would like to see the market going down lower. Let me check the 4 hours. Well, the 4 hours is currently at an area of supply. This is also where the market previously went to the downside from here. So here, strong movement, and then back up again, move to the downside. We're testing that level again, showing us right now, okay, we will break that level. Of course, it can be a possibility, don't get me wrong at this point, but it is definitely a good area for potential reversal, as well as this area over here. Okay, so you can, in this case, that's not the best conditions right now because you got a huge area of supply. So that means during this whole area over here, guys, we have a ton of liquidity for potential short setups. Okay, it's not super easy to get right now a good snapper entry. In that case, you will need probably to take a higher stop loss because of this whole area is high level of liquidity. Okay, right now what I suggest for you is to wait for the market right now to give you here your price action confirmation according to your strategy. If you have it, go right into shorts. If not, then you should probably wait for market to go maybe a little bit higher before dropping down lower. And how I view this market as well is in this correctional channel right now. Okay, from my point of view, it really looks like this, using over here the structure one. So it is just building the liquidity currently for the strong movement to the downside. And also over here previously we had an M formation, market went down lower, test right now of the supply, and then I expect that the market should give us sooner or later a big sell-off to the downside to break these lows, like I mentioned already in the daily time frame analysis. Okay, so this is how I feel right now in the market. Let me just map out quickly the weekly level of support resistance where I'm looking for a potential buying opportunity again. So look at this, that's going to be a high target for you. Okay, definitely a lot of pips to catch, definitely big risk reward possibilities in this case according to your strategy, of course. And if you're struggling to find right now over here an entry, guys, then come on, check out the inner circle, bro. I'm going to share with you every single trade that I take, and I'm super confident of the short. And if it will not drop down over here, guys, I think that it will drop down a little bit up higher. So from my point of view, it's not a problem, and I will still stick to pretty tight stop losses. So I always use a max stop loss of 20-25 pips, something like this, and that's it. And we have right now potential of 200 pips. Now you know the risk reward equals about 10 in this case. Then that would be nice. 10, 11, 12, something like this, depending on your exact stop loss then afterwards. But yeah, guys, that was my full breakdown analysis for the GBPUSD. It was a little bit different, of course, because of the market phases. I hope you enjoyed that one, and if you liked this video, don't forget to like it, comment it, give me a little bit of feedback, and yeah, we're going to see the next time with a new video. Here to the right and to the left sides, you will see over here my education playlist, and you will see, of course, most relevant videos from my channel. So see you guys next time with a new video. Bye bye, guys.